Hi, this is Attorney Lewis Haskell. This is actually a staff training video. However, I am going to post it on YouTube, hence the introduction. Some of this will be a little bit strange to people outside of my office. Some of this will be a little bit strange to people inside of my office, but I think I can do both of these things in large part because the software really hasn't been developed for this issue of COVID-related distributions from retirement accounts, and thus this is more of a general overview than a nuts and bolts of how to do it. However, I'll begin with some nuts and bolts issues for my staff. The CARES Act, the first stimulus bill, set out some very generous provisions for how to deal with retirement plan distributions that result from COVID. The first problem we're going to run into is that the 1099-Rs that we receive are not going to tell us that these are distributions as a result of COVID. It would be nice if they gave us, a code saying that there is an exception for the early distribution or whatever, but there is not one. And the employer has no obligation to make this indication because in a lot of cases the employer's not going to know why the employee is taking the money. So what's going to happen is we're going to enter 1099-Rs the normal way, and our refund monitor is going to go crazy because it's going to have tacked on a 10% penalty, and it's going to have tax the entire distribution and all that good stuff, and that's not right. Now, if you're in the software and you're in the 1099-R worksheet, you scroll down, you'll see that in the disaster relief sections, they've added a little line for 2020 COVID related distributions. And if you check that box, you're going to get an error message saying that the forms related to this aren't out yet. And, so be it. So let me discuss instead, what the general idea is here. The CARES Act basically says that anyone affected by COVID can take a IRA 401k distribution, a retirement plan distribution of up to $100,000. And number one, not pay the 10% penalty on it if they're under age 59 and a half. Number two, that this distribution can be spread out over 3 years. And particularly with the larger distributions, that's a big deal. In other words, let's say somebody takes the maximum $100,000. Pretty much no matter who they are, that's going to put them into a higher tax bracket. And, so if they're in, this could push them from the 12 all the way to the 24% kind of a thing. So, but if you break it down, 33 and a third, 33 and a third, 33 and a third, you don't see so much bracket creep. You're certainly not going to get from 12 to 24. You could get from 22 to 24, but even there, you'd have a lot less 24% tax. So being able to break it into 3 pieces is sweet. Another issue that is not an important one in terms of preparing 2020 tax returns, but is something we do need to be able to talk to clients about and will certainly become an issue for us in the future, is that the client has 3 years to repay some or all of this money, to put it back into a retirement account. So, in theory, someone could take the $100,000 and, just under 3 years later, put the $100,000 back into an IRA and 401k and avoid the entirety of the tax. Now, clearly that's going to make a big issue for us in the future. My guess is we'll have to come back and amend these returns. It's possible the IRS will create a new form for dealing with this problem. The IRS has not issued any guidance on how to deal with 401k or retirement plan distributions that have been taxed and then repaid after they've been taxed. That, as I say, is an issue for another day, but we do want to tell our clients, and in fact encourage our clients, that if they have the ability to pay some or all of this money back, they should, and that we will be here to help them. Now, the big question is, what is a COVID-related distribution? And I am very pleased to report that the IRS's guidance on this is extremely broad and frankly kind of generous. And with that in mind, I'm going to say that anytime we have a COVID distribution, I want you to mark in the comments box that we have a COVID distribution so that I can review it. For now, of course, rely on what I'm saying, but the IRS does have a rule that when something seems too good to be true, it probably is, and the IRS guidance, it's wonderful. I'm not used to the IRS being so generous in interpreting a statute. So let me just pop up on my screen where, oh gosh, where do I have this? Here we go, the COVID definition, or the COVID guidance. And I will be circulating this PDF around the office, but all I really did was Google IRS guidance on COVID distributions.
This came back from a search.
Oh gosh, isn't that funny? In any event, the first definitions of a qualified individual are anyone who has had COVID or anyone whose spouse or dependent has had COVID, as long as there is a good test. And that's the entirety of the requirement. So to put that, to understand what I'm saying here, I qualify for a $100,000 401k distribution without penalty and able to spread it out over 3 years because Sasi Khan, my wife, tested positive for COVID. She had no symptoms. The only real hardship on me, besides the fact that I had to isolate from my wife for a little while, was that I had to work remotely for a week or so until all of this was sorted through. But I qualify under the IRS guidance, and if that's the way the IRS is going to write it, then that's the way we're going to do it. But again, if I have a person in my in my situation, or in the situation I just described, more to the point, I think I would like to check and see if the IRS has updated their guidance. I would recommend to any client who is claiming this based on themselves, their spouse, or their dependent testing positive for COVID, that they give us a copy of the test. This is not so much a due diligence issue like we have with child tax credits and earned income credits and the like, where the IRS requires that we get a document and keep it. It's more of a service, quite frankly. In other words, they could get audited 3 years later. They probably will have some difficulty getting a hold of their test results. If they give it to us and we scan it into our computers and whatnot, then we will have it. And so it would probably be a best practice if they gave it to us. If they don't want to, or if they seem put off by it, by no means push it, because again, it's just us doing something a little bit extra for them, and if they don't want it, well, we're not going to force them to take it. The IRS, however, has other guidelines for how someone could be affected by COVID, and really anyone who loses income. Anyone who has to be quarantined, who's furloughed, who's laid off, who has a reduction in hours. anyone who has a job offer rescinded or delayed because of COVID. And so frankly, this is going to be just about anyone. And by the way, it's not even if it happens to them. If it happens to their wife, if their wife or husband, if their spouse loses time from work, has a job offer delayed or rescinded, has their hours reduced, by the way, can't work because of child care due to COVID, is furloughed, let off, whatever. Or if a member of their household fits into one of these categories. And by the way, the IRS has defined household member as, and I'm quoting here, someone who shares the individual's principal residence. So you don't even have to be related. I would counsel that claiming a roommate or something is pushing it, but I would say that the IRS regulations say that that's fine. So as I said, I would document the file just to cover us, in case the IRS comes back later and says, "Come on, that's not what we meant," but it's what they said. Someone who shares the individual's principal residence. So as I say, that's a lot of people who the taxpayer may not be particularly dependent upon, or who the taxpayer has any obligation to support. But if they've lost income in any of these myriad ways, reduction in business income, reduction in business income as well, in any of these myriad ways, qualifies for this distribution. Again, we probably want to encourage our clients to give us whatever documentation they have to support this, just so that we can help them out in the future if it becomes a problem. But we're certainly not going to require it or push it or anything like that. It's frankly, again, it's not our problem. It's just us trying to do the best possible job that we can for our client. So, that is basically the long and the short of it. Once we determine that somebody has had an adverse financial consequence, and here's the really exciting thing about the guidance. The adverse financial consequence doesn't have to be proportionate in any way to the retirement plan withdrawal. And in fact, the IRS guidance actually says as much. I'll see if I can find that real quick. But say I have somebody, they get laid off, they take the 401k withdrawal, a week later they get a better job, they wind up making more money in 2020 than they did in 2019, say. They lost that week. I purposely made this easy because I picked a week in which they're losing money. But the way the guidelines are written, it says that the withdrawal does not have to be in any way proportionate to the harm. It is simply a matter of, if you meet one of these boxes, one of these categories, you get to take it. So that, for example, in my situation, let's say 2020 was a great year. It wasn't, but let's say it was. But my wife had COVID. I apparently am allowed to do this, and again, I would like to check whatever the IRS is saying, on the day that I would claim such a thing, or that I would claim it for a client, which is why I want all these referred to me for review. But as things stand and as the guidance is written, I would sign off on that, and have no problem doing so. As I say, I would give a notification to the client that I think this is too good to be true. But it is what it is, and this is what the IRS says it is, and they make the rules, not me. This has, been true in a lot of areas where my clients think that the tax law is ridiculous, and I say to them, well, they make the rules, not me. Here's one where the IRS may be being a little bit overly generous, but guess what? They make the rules, not me. So that is wonderful. Similarly, if we're turning down a claim that it's COVID-related, that needs to come to me as well, because these things are very elastic. And my guess is I can slide the client into a COVID-affected category. Even if you don't think I should, but that's my call to make. So in any event, this is what's going on in terms of the new retirement distribution rule. We will be seeing a lot of this because, well, let's face it, we see a lot of retirement plan distributions even before COVID was ever a thing, and we'll be seeing a lot, and we'll probably be seeing a lot more this year. I know that I advised several clients during the year about COVID distributions, and so I know that we'll be seeing them from them. But we'll be ready. Thank you.